Do you love the feeling of cash hitting your account every month from dividends? You think you are achieving great success like the others? Well, I have some news for you. Wrong. Those dividend checks might actually be burning a massive hole in your long-term wealth. The truth is, these dividends could be costing you over 9 billion Vietnamese dong without you knowing. While Jake celebrates passive income, Marcus, who buys a simple index fund, is leaving him in the dust. Why is passive income a comfortable financial trap? Let's reveal the brutal math behind dividend investing. Meet Jake. Jake loves dividends because they feel like free money delivered to his pocket every quarter. And then there is Marcus. He does not care about cash flow right now. He just wants growth. Jake feels like he is winning because he sees actual cash. Marcus only sees numbers on a screen. This is the illusion of income. It feels good, but is it actually making Jake richer? Spoiler: no. Enter the dividend irrelevance theory. When a company pays a dividend, its stock price drops by that exact amount. It is like taking $10 out of your left pocket and putting it into your right pocket. You do not have more pizza just because you cut it into more slices. You just have smaller pieces. Dividends are essentially a forced sale of a portion of your own assets, whether you want it or not. Marcus keeps his value inside the company to grow. Jake is required to withdraw it and cover a fee. Now, let's talk about the silent killer of wealth, the tax drag. This is where Jake loses big. Every time Jake receives a dividend, the government takes a cut immediately, even if he reinvests the money. Marcus, however, does not pay a dime in taxes as long as he does not sell his shares. This tax drag slows down the power of compounding. Jake's snowball is being chipped away every single year.
Paying 15% tax annually might seem small, but over 30 years, it becomes a financial catastrophe.
Marcus has control. He decides when to pay taxes. Jake has no choice. The tax bill comes automatically. Look at the math. Even a 1% difference in annual tax drag can lead to massive gaps later. But wait, don't high dividends mean the company is doing great? Not necessarily. Let's look at the risks. High yield often signals a company in trouble. Investors chase these high returns, unaware of the underlying decay. Yield chasing is like picking up pennies in front of a steamroller. It works until it really doesn't. Then there is sector concentration. Dividend portfolios usually ignore the fastest growing sector of the last 20 years, technology. By focusing only on dividends, Jake missed out on the explosive growth of major global tech innovators. Jake's portfolio is stuck in the past, while the world, and Marcus, is moving into the future with tech. Now, the moment of truth. Let's fast forward 30 years and see the results of these two strategies. Marcus, with his simple S&P 500 index fund, has reached a staggering $1.78 million. Meanwhile, Jake's dividend strategy only brought him to $1.41 million. Still good, but not Marcus. That is a gap of $370,000. That is the 9 billion dong I mentioned. Was the feeling of those quarterly checks worth losing 9 billion dong? Most people would say, absolutely not. In retirement, Marcus still has the upper hand. He has complete control over his taxable income every year. Jake is still forced to take income and pay taxes, which could even push him into a higher tax bracket. And let's not forget the step up in basis for Marcus's children. They could inherit that wealth tax-free.
Investing is about the final destination, not just the comfortable feelings along the way. Math doesn't have emotions.
Choose the strategy that maximizes your wealth. Don't fall for the passive income trap. Focus on total return. Invest smart, minimize taxes, and let your wealth grow without the dividend drag. See you in the next video. Keep your notifications on. Don't miss out. Remember, $370,000 is enough to change your life completely. Think about what you could do with that extra 9 billion Vietnamese dong in your golden years. Inflation is always eating away at your cash. You need the highest total growth to stay ahead. The world's best companies reinvest their earnings to innovate. They don't just hand it all out. Even the greatest investors focus on the long game. Dividends are just one part of the story. Marcus's strategy is like having a shield against the taxman for 30 long years. That is power. Jake's money flies away to the tax office
little by little. It is death by 1,000 cuts. 1.78 million. That is the power of the S&P 500 when left alone. If you look closely, those financial returns were never really free. They were paid for with future potential. Marcus is driving a Ferrari on the highway. Jake is driving a sedan with the brakes slightly on. 30 years pass faster than you think. Start the right strategy today, not tomorrow. Your future depends on it. I want you to be like a successful leader. I want you to have that extra level of prosperity. Look at how technology has dominated the market. If you don't own it, you are falling behind. Innovation is the true driver of wealth in the 21st century. Dividends are for the 20th century. Stay focused on the companies that change the world. They usually don't pay high dividends early on. Amazon never paid a dividend, yet it made people millionaires. That is the power of retained earnings. The value is in the innovation, not the cash payouts. Marcus understands this. Jake does not. Learning the tax law is just as important as choosing the right stocks. It's a game of math. Deferring taxes is the ultimate legal loophole for building massive wealth over several decades of investing. The government wants their cut now. Marcus says, no, you can wait 30 years. That's the difference. Let that money compound fully. Don't let taxes stop the momentum of your wealth-building journey.
See the growth? Marcus's tree had more water because it didn't lose any to the tax drag. Marcus is the winner of the math game. He followed the logic, not the feelings. Total return is the only metric that matters in the end. Remember that phrase? Total return.
9 billion Vietnamese dong. That is a lot of houses, a lot of travel, and security. You have the power to choose Marcus's path today. It only takes one simple decision to start. Open your brokerage account and look for the low-cost S&P 500 index funds. It's that easy.
Small actions today lead to massive results 30 years from now. Don't wait for the perfect time.
Time is your greatest asset. Don't waste it chasing dividends that slow you down significantly. You can do this. You have the knowledge now. Go out there and build your empire. Your future self will thank you for choosing the path of growth and tax efficiency. Wealth is not just for you. It is for your family's future and for generations to come. Leave a legacy that is not taxed away. That is the ultimate gift for your children. Marcus's children will inherit the full 1.78 million. No questions asked. No taxes taken. Financial security is a marathon, not a sprint. Pace yourself with the right strategy and logic. I hope this comparison opened your eyes to the truth about dividend investing and tax drag. Let's review. Ignore the illusion. Avoid the tax drag, and focus on total growth sectors. Point 1, dividend irrelevance. Point 2, tax drag. Point 3, yield chasing risks. Remember them well.
And finally, the 30-year result. $370,000 of extra wealth for Marcus.
Now you have the map. It is time to start your journey towards real financial freedom. Join our community of smart investors who prioritize math over marketing and growth over feelings. Thanks for watching. Don't forget to like and share this with your fellow investors. Follow us for more deep dives into the math of money and the science of wealth.
Don't let 9 billion dong slip away. Invest with your head, not your heart. Invest wisely. That's the key to a secure future. Trust in your strategy.
Make a smarter move in the market. Invest wisely. Start your journey today.